All right, Shalom. First and foremost, I want to give all praises, honor, and glory to Yahweh, Bahasham, Yahweh Shai, Bahasham, Recha, Kodash. Double honors to the elders and the apostles of Great Millstone, and peace and blessings to the elect. And as you can see in the title, the transition has begun. Fednow is live and Fed rate hikes. And I think earlier this afternoon, the Fed, the Federal Reserve, increased interest rates again. Okay, this is a tweet. And I'm going to read it real quick, and then I have a couple of articles here that we'll go into. Okay, because as I was thinking about this, I also remembered that the FedNow system is live. I think came live a couple of days ago or about a week ago or so, um, which is another step or another piece that's been put down. Okay, in this whole transition, because we're already in the transition. Okay, it's not an overnight thing. Keep in mind that what they're doing here, or what they're attempting to do here, is an actual global financial transition on the whole world, not in one state, not in one city, not in one company, okay, not in one country, but the whole entire planet, the whole world. So it's not something that just happens overnight, and it takes a lot of behind the scenes work. In fact, there's much more happening uh, um, behind the scenes than what you're seeing outwardly. Okay, nevertheless, it's not an overnight thing. Okay, so the transition, we are already in it, but people think that when they start to see the effects, okay, as we start to near the ending of the transition, that's when they think, oh, now we're transitioning, but that's not really the case. Okay, so now let's read this real quick. So it says the Federal Reserve just now raised interest rates to the highest level in 22 years, between 5.25% and 5.5%. For most African economies, this has negative impact. It says increases borrowing costs, depreciates further local currencies against the dollar, increases already high inflation. And in terms of the, say, American citizens, all right, this is not good for you either. Now they're saying that already as it is, people are maxing out their credit cards just to get by in order to pay bills. See, when you have a credit card, there's a certain usage that they expect you to be in. You really, I think it was what, 30 or 40% or something along those lines. But pretty much, when they give you a credit card, they expect that you don't use it all. Instead you use just a little bit, you pay it off, a little bit, you pay it off. So, you're always in debt, but you're always paying it off, and then you're always that kind of stupid shit. Okay, but now people are finding themselves in such a hard situation that they're relying. Okay, it's not just paycheck to paycheck. Now they're relying on these credit cards, multiple of them, in order to try and keep up with their bills. And even then, some are still falling behind. And in that case, you just pile on more bills. So things are already tough for people as it is. And what's going to happen as these interest rates keep on going up and up and up is things are already broken. Okay, things are already broken, and they're going to get worse. And that's going to, yeah, they're trying to do it to lower inflation, but it's not just going to lower inflation alone. Okay, what it's going to do is it's going to cause massive unemployment. Okay, it's going to cause a lot of economic downturn, as a lot of companies start to have a harder time keeping their doors open, okay, and maintaining, all the other bills that they need to pay. A lot of employees are also going to start to lose their jobs, and that's just going to make things even worse. But why are they not stopping? Because they don't need to stop. Remember that as they're transitioning, and as we go into this article here, based on the responses that this guy Jerome Powell is given, you can sort of get the understanding, or the vibe that these people know exactly what they're doing, And in fact, it's almost as though they're in a position that they want to be in. So they're not remember that the Fed, the Federal Reserve is not loyal to America, okay, or loyal to the country that whatever central bank it is. They're not loyal to the country that they're in. You are a business partner, put it like that. They're working with you, okay? So they do what's best for them because the Federal Reserve is not an actual federal entity. This is privately owned. They do what's best for them, okay? And if that means they need to, because what was the whole goal? The whole goal was to infiltrate your country and gain power over you. This is why Mayor Amschel Bauer said, "Give me control over a nation's money, and I care not who makes the laws." So why didn't he target just immediately going into the instead of going after the money or going through the money? Why didn't he just go through the politics? Why didn't he just go straight up through the lawmakers and the presidents and so on and so forth? He didn't need to, because through the money he could get there. And when I say he, I mean him and his sons and all their associates. Because if you get into the ears of one politician or one president, or you get into one person's cabinet, you have only but so much control. Eventually they could get booted out. Somebody else could come up in there. But if you can become like a leech that is just vested inside of a crucial aspect of whatever nation it is you're looking for, like their banking system, like their money maker, somebody that no matter who's in power, who is in office, they will always come to you, then you're going to have influence over them. You're going to have control over them. See? So when the US needs to borrow money and they go to the Fed and the Fed prints it and then gives it to them, guess what? Let's get this real quick. This is the book of Proverbs, chapter 22, verse 7. It says, "The rich ruleth over the poor." And that's not a new dynamic. But as it says, "and the borrower is servant to the lender." So what they did was they made themselves the lenders and they made everybody else the borrowers. The citizens are subject to their governments, even though it should be the other way around. But anyway, the citizens are subject to their governments are subject to their central banks, and their central banks are subject to the central bankers or these rich families or these elites. So the ultimate lender goes back to these elites now, and the ultimate servants goes back to everybody else. And that's why it says the rich ruleth over the poor. And I mean, like, once again, this is not a new concept, but this is something that these individuals understood very well and capitalized off of it. That's why they went into the finance aspect. Okay. So now let's come back here and let's read a little bit of this article here. And so pay very close attention to what the next events that keep happening. You know, more than likely they're just going to keep on hiking these rates, and things are going to get bad. There's going to be a very massive downturn very soon, because this economy is not, it never once, they didn't stop and say, hey, let's actually fix this thing. No. Okay, it's always been band-aids or things that were made to look like band-aid solutions, but really it was just continue to make it worse and worse and worse. And that is a sign that they're leaving this old system, but they need to leave it in pieces. They need to completely damage it beyond repair, so that they can build upon that, the foundation for the new system. And the Fednow is a part of the new system. So they didn't put the Fednow into place and let it go live because they wanted to revamp the old system, or maybe revive the current financial aspect of things. No, the Fednow system they put in place because it's going to be another part of the stepping stones for this new central bank digital currency. And that's what's going to give them the ultimate control. So do they care whether they break one or two or three or five or 10 more things as they're hiking these interest rates? Of course not. Anyway, it says Powell tries to convince market to please stop fighting the Fed. which may hike one more time. It says, as we noted earlier, Powell has a problem on his hands. The unemployment rate is exactly where it was when the Fed started hiking last March. So it says, while, okay, Fed funds versus unemployment rate. It says, while financial conditions are now far easier than where they were last September, and adding insult to injury, the S&P is back where it was just as the Fed started hiking. Hardly the outcome Powell and his henchmen had hoped for in their crusade to crush inflation. But then again, maybe it was the exact thing that they hoped for. Okay, but they just needed to switch up the story. Maybe they liked the outcome. They just needed to switch up the story because when they started hiking these rates, the condition of the economy, look, it was grim, but really it was ideal for them. But the problem was the cover story. The cover story wasn't good. The cover story was something is going wrong and you guys need to fix this. So they said, "Oh yeah, we'll fix it all right. We're going to start hiking these rates." And guess what? Now we're back where we started, but it's okay though because we have a good reason. We have a good reason now, a good cover story now to keep on doing what we're doing. So it says, meanwhile, commodity prices are starting to ramp, sparking speculation that the ghost of Arthur Burns and the Fed error of the 1970s busted hiking cycle is alive and well. So, what is Powell to do? Well, he has this press conference to convince traders, algos, and other dip buyers to stop doing that and sell. Will he be successful? Sit back and watch. So, pretty much what you see here are highlights of, what I guess what was said in this press conference, and I'm just gonna read some of the ones that are in bold. Okay, so it says FOMC. This is from Powell to take data dependent approach on future hikes, meaning they're gonna look at the data. Now, whoever's feeding them that data, we don't know. That's the data that they pulling up, their so-called trusty data, and they're gonna follow that. So if the unemployment rate is skyrocketing, people are suffering, but the data says you got to keep hiking. Guess what? We're gonna hike again. Okay, it says we'll continue to make decisions meeting by meeting. Haven't made decision to go to every other meeting. Possible we'd raise or hold in September if data warranted. You see that? So remember with the big C, all right, the pan D that happened what 2020, 2019, 2020. They did the lockdowns and all that. And they kept uh doing what they were doing with the justification that trust the science. It was the science that they were following. The science is what was telling them do this and do that, and that's what they were following. Forget what everybody else said. If the science said the numbers were going up, then they got to do this. If the numbers are going down, then they can do this. So now you have another situation where you got to trust the data. Okay, you got to trust the data. If the data says inflation is still up, we hiking. Okay, trust that data. Don't trust the other data. The data that says that people are losing their jobs at record rates, companies are going under, prices are still up. Don't trust that. Just trust the other data, right? The one that's giving them the batteries in their back to do this. So it says, let me see. Let's jump here to another one. It says, as stance is more restrictive, increasingly face risk. Policy not restrictive enough for long enough. Idea of hiking rates until inflation is at 2% is way past target. Don't see inflation. Now, listen to this. Um, don't see inflation back at 2% until about 2025. So, but clearly above, he says would stop raising before getting to 2% inflation. Okay, that's what they say now, right? But if you don't see inflation back at 2% until 2025, we're in 2023. So we have the whole of 2024, okay, and a little bit more of 2023. What's your plan of action? Are you going to continue to hike rates because you don't see inflation back until 2025. So you just got to keep hiking, hiking, hiking. And at the rate at which they're hiking these or raising these interest rates, by 2025, inflation can be down to about 2%. But keep in mind that that is the reason he started here with don't see is because that is a, let's just say, a guesstimate or an estimate from today, right? Or from now, or from what the data says today. But if next month the data says something else, then who's to say that maybe it won't be 2025, maybe it'll be 2026. And then they got to readjust and say, oh, well, it looks like instead of hiking another maybe 20 0.25 BPS or whatever, whatever numbers they use, we got to increase that a bit more. See, that's the manipulative um upper hand that they get whenever they start to use these kinds of terms, right? Like, oh, we're going based off of the data, or we're going based off of this or X or Y or Z, because X, Y, or Z can change on any given day. And anytime it changes, they got to now go and do something different. Okay, but all in all, um, the point that I'm making is that I think that they're definitely, at the point where it doesn't matter to them how high they raise this. Okay, they have a goal in mind. They're not doing this on the fly. They don't never do anything on the fly. Okay, they're not doing this on the fly. It's all orchestrated, and there's a reason. We're getting closer and closer to the introduction of that CBDC, and it's coming. Okay, that's why they got this right here, this Federal Reserve's Fednow service. And though it went live, I mean, for those that are aware of it, but aside from that, it's not really, it hasn't really been pushed out there or talked about so heavily. But its time is going to come. So let's read a little bit about this. It says Federal Reserve's FedNow service for instant payments is now live. It says the Federal Reserve has announced that its new system for instant payments, the FedNow service, is now live. Banks and credit unions of all sizes can sign up for and use this tool to instantly transfer money for their customers anytime, any day of the year. Now, that money that they're going to be instantly transferring, okay, is what we need to focus on. Because what money really is this? It's not gold, it's not silver, it's credit. Okay. Instead of going through, whatever ACH or wire or whatever means they use, then it takes maybe 1 day or 2 days, or even if it's the same day ACH, it takes some time, you know, whatever it is, that they use, even direct deposit, sometimes that takes longer. They're gonna using this FedNow payment system, you can have instant payments. So say you're supposed to get paid today, right? When your company or your company sends out your paycheck, instantly it will get to you, instantly into your account. You don't need to wait 1 or 2 days for it to clear or for it to now come through. And no. Instantly it's going to get there. But what really gets there is just numbers. Okay. It's literally just like credit, it's just digital. So this is a system that is made to work best with digital currencies that allow for that fast transactions from point A to point B. So it says, let's see. To start, 35 early adopting banks and credit unions, as well as the U.S. Department of the Treasury's Bureau of the Fiscal Service, are ready with instant payments capabilities via the FedNow service. In addition, 16 service providers are ready to support payment processing for banks and credit unions. Let's see. All right. The Federal Reserve built the FedNow service to help make everyday payments over the coming years faster and more convenient, said Federal Reserve Chair Jerome H. Powell. But he's out here hiking shit though. So it says over time, as more banks choose to use this new tool, the benefits to individuals and businesses will include enabling a person to immediately receive a paycheck or a company to instantly access funds when an invoice is paid. So when, basically, like, for example, you buy something, right? You purchase something online. and then instantly they take the money out your bank account. But then say the order doesn't get to you or there's something wrong with it, and then you want a refund, they tell you that you got to wait 3 to 4 business days before you can get a refund. Well, with this instant payments, you won't have to wait 3 to 4 business days. The second they investigate and they find out that your refund is valid, your money comes right back. So of course there are going to be these sorts of advantages, convenience wise, that are going to be enticing to people, right? Hey, that you do this, you can get that. You do this, it's going to make this easier. And the convenience is what covers up. Like it's like so-called reading the terms and conditions, or whatever they call them, the fine prints of some app that you're downloading, or something that you're buying, or whatever it is, and you're signing something at the end, or you're acknowledging that, hey, yeah, you guys can go ahead and do this. People don't really read those long ass terms and services and all of those things. Okay. And especially when whatever it is you're trying to get is so wowing, so amazing, that you don't really care about what's in the terms and services. Your mind is focused on what you're going to get. So that's also another tactic, right? Which is use the excitement of the people to blind them from the dangers that this can present. So do you think that they're going to highlight to you the level of control that they're going to have through central bank digital currencies? Of course not. Do you think that they're going to promote this in a perspective where you start to think, well, if you can track every transaction, wouldn't that take away, my privacy? No, they're not going to push it from that angle. What they are going to push it from is, this is going to allow us to better detect fraudulent transactions. If anybody tries to steal your information, all of these things, you'll be better protected because we'll have more access and more resources to act faster. These are the angles. It's all marketing strategies. But this is not something that this ain't the road that you want to go down. It's gonna be all fun and games until you're like, okay, I've been using this for a couple of months now. I got the hang of it. The excitement is gone. Now it's just another norm. And then comes the restrictions. And then comes the, oh, you believe in this kind, or you are supporting this these beliefs and these views. Okay, now we're gonna shut down your account. Or now you can't receive transactions. Oh, now your account is frozen. Oh, you don't want to comply with the new rules that we've added to our terms and services, then we cannot support you anymore, and we're going to terminate your account. Anyway, let's see, is there anything else on here? All right, let me read this last part. It says, for example, individuals can instantly receive their paychecks and use them the same day, and small businesses can more efficiently manage cash flows without processing delays. Over the coming years, customers of banks and credit unions that sign up for the service should be able to use their financial institution's mobile app, website, and other interfaces to send instant payments quickly and securely. Okay, so this is basically what the Fednow payment system is for. Is to allow for instant payments, instant transactions. At least that's what it's starting off as. Okay, now what is it going to grow into, or what else is it going to come with? We got to watch and see. Okay, but the whole point is, this is everything that you're seeing, from the Fed rate hikes, from the Fed Now system going live, from even what's happening with BRICS. Okay, all of this is going to come together and play a role in the transition. Okay, from this current monetary system to the new digital monetary system, where they turn your ass into a digital slave. All right, and that's pretty much where things are going with that. So anyway, with that, Lord willing, that was edifying to the elect. In closing, I want to give all praises, honor, and glory to Yahweh, Bahasham, Yahweh Shai, Bahasham, Rachak Wadash. Until next time, Shalom.